Hey guys, welcome back to the channel. Now in today's video we'll be diving into the most effective and most popular forex indicator in the forex market, the moving average. So in today's video I'll be telling you what the moving average is, how can you use the moving average to find trends in the market and be able to catch high probability setups in the forex market. So make sure to watch this video from the start to the end, because the moving average can be a game changer if you know how to use it the right way. So if you're new around here, please make sure to subscribe and let's get started with this video. Now, first things first, traders, what is the moving average? The moving average is an indicator that calculates the moving average of an asset to smooth out the price data over a specific period of time by creating a consistently updated average price. The moving average just helps us to smoothen out price action. Remember, in this forex market we have the buying and selling. So for us to know what buyers and sellers are doing in the market, we can use the moving average. Now, there are three uses of the moving average. The first one is to find trend in the market. Remember, the forex market has a structure, and this structure is made of an uptrend market, a downtrend market, and a sideways market. Now, in order to know the trend of the market, we can use the moving average. Now, the second point is the moving average can help us catch trend reversals in the market. So anytime when we have price moving from an uptrend to a downtrend, we can always use the moving average to catch the trend reversal. And lastly, and this is the most important one, the moving average, you can use it to spot major resistance and support zones in the market to be able to catch good trends. Remember, whenever we are going to buy in the market or sell in the market, we buy at support zones and sell at resistance zones. So the moving average helps us with also catching support and resistance zones in the forex market. Now let's jump onto our chart right here. Now I'm going to be using the 50 EMA and the 200 EMA. So what does EMA mean? EMA means exponential moving average. We also have the simple moving average, but I use the exponential moving average. So I use the exponential moving average. I use the 50 and 200. The 50 means the 50 period. So the 50 moving average helps you to calculate the average close of the 50 candles. And then the 200 EMA helps you to calculate the average close of the previous 200 candles, as you can see right here. We also have the 20 EMA. Now the 50 EMA helps us with short-term trends. So if you want to catch short-term trends, probably short-term reversals in the market, we use the 50 EMA. But if you want to catch major trends in the market, we use the 200 EMA. And right now I'm on my 4-hour candle. So the first thing, how do we find the trend of the market? When we apply the 50 EMA and 200 EMA, we're going to see that prices ranging, pushing up, but it's going to be ranging above our moving average. So anytime when you apply your moving average and then price is ranging above our EMA, it means we're in an uptrend. As you can see right here, this is a good example, as you can see. So the 50 EMA is so close to price because it's for the short-term trends, and then we have the green one, which is the 200 EMA, which is for the long-term trend. So you can clearly say, when I zoom out like this, we can see price is just moving in an upward way, as you can see right here, and price is ranging above our EMA, which is the 50 EMA. Now whenever we see price come close to the EMA and starts ranging above and below here, this is what we call a consolidation. So with this type of market, we don't really trade here. We only wait until price moves above our EMA, like this right here. This is the 50 EMA. Price crosses, when price breaks it and then retests on it and then shoots back up, as you can see. So this is what we always want to see, an uptrend. In a downtrend market, we have to see price ranging below our 50 EMA and the 200 EMA to know that we are in a downtrend market. The same way you would draw a trend line. So if I was to draw a trend line right here, remember the trend line also helps us identify the trend of the market. So when we do a trend line like this, we can see that price has been ranging below our trend line. So that is the same thing with the EMA right here. We always want to see the price ranging below our 50 EMA and the 200 EMA to indicate that we're in a downtrend market. And then anytime when we see price ranging and it's coming up and down our moving average like this, price is moving up and down like this, it means this is a consolidation. So we don't trade here, we wait until price can break it and then closes below for us to be taking trades. So this is how we find the trend of the market using the moving average. You just have to see price either moving above the moving average indicating that we have an uptrend, and then we have to see price moving below our moving average to know that we're in a downtrend market. Now let's jump on to the next important point. How do we catch price reversals in the market? So for us to see a reversal to the upper side using the moving average, we're always going to first see price cross both the moving averages. So here you can see we had price cross both the 50 EMA and the 200 EMA like this. So we're always going to see what we call the moving average cross. So anytime when you see this cross right here, it indicates that we're going to see a new trend in the market. So for the uptrend market, we're always going to see the 200 exponential moving average cross the 50 EMA like this. Now we're going to see this gap between the 50 EMA and 200 EMA starting to enlarge, indicating that we're now starting to see a new market, which is the uptrend market. So the reversal happens when we see the 50 EMA cross the 200 EMA. Now also have price starting to move in an uptrend, but it's moving an uptrend above both our moving average. So this is where we see the reversal from, after seeing the 50 EMA and 200 EMA cross like this. So we always want to take our trade when price comes back for the retest at this right here. So price only comes back to the retest onto the moving average. So this is how you catch a reversal in an uptrend. Now traders, note, not every time when you see the 50 EMA crossing the 200 EMA, it doesn't indicate that we're always going to have a major trade reversal. It can be minor trade reversals like this. So traders, you can see we had a cross right here, and then we had a short-term trend to the downside up to this zone right here, and then we had another cross right here where we had price moving in an upward way for a short-term bullish market to the upper side, as you can see right there. Then we had also a cross, another one right here, we had price range below, and then also we had another cross right here. So not every moving average cross is going to indicate that we have a major price reversal. Now before I go any further, this video was sponsored by FastBull. FastBull is the only trading platform that I use before I start off any trading week. So before I start off any trading week, I always want to check what major news events that we're going to have in that week that are going to affect the market. Remember, the forex market, we have technical analysis and fundamental analysis. So for us to see our fundamental analysis, we always have to see this from a platform, and a verified platform. So FastBull is the only platform that I see. So these are the economic events that we're going to be having today, as you can see. So you can just tap on any of these, and then you're going to be reading on how these events are going to be affecting the market. So we have also what we call the 24/7 news. So we have news that are dropping every day, 24/7. These are recommended one. We have stocks, we have cryptocurrencies, central banks. So these are news that are dropping anytime soon. So whatever happens in the market, whatever happens in the political and financial market out there, everything comes up here. As you can see, it can either be stocks, it can either be cryptocurrencies, or it can either be central banks. So these are all things that affect the forex market, and it's always crucial for you to watch these before you start off any trading day, guys. Another thing, we have the chat rooms. The chat room, this is where you can communicate with your fellow traders, as you can see right here. So if you have any question and any analysis that you want to share with your fellow traders, this is where you have to come, and then you join the chat room. And also you can also create your own chat room right here, and then create a new group right here, and then you can be able to add more contacts and then trade successfully. And the best thing is, if you can download FastBull onto your phone, it will be easier for you to access it. Even when you're in the gym, when you're traveling, you can be able to access the FastBull. Now the last importance of the moving average, we use them to support and resistance zones in the forex market. Yes, traders. Now, as I mentioned earlier, the moving average is there to help us smoothen out price action. Now, price action is where I look at the charts with my naked eyes. Now, for me to apply some analysis, I'm always going to use trend lines, support and resistance zones, to draw them out. But now the moving average smoothens that out for me. I'll give an example. We have this part right here where price came back and retested onto, where we had price retracing back onto our 50 EMA. Now, when I draw a line right here, so you can see that when I draw a line right here, you can see that price came back and retested off this support zone, as you can see right here. So this was a support zone, this side right here, and also a support zone right here, as you can see. So if you're looking to buy in an uptrend market, we always buy at support zone. So this would be a good example for you to buy off a good support zone, because it's not just a support zone of here, but also a support zone of the 50 EMA, as you can see. The downtrend market, that is where we see mostly resistance zones. So you can clearly see here this zone right here where price crossed and went up to the 200 EMA. So we had price, bounce off this zone right here. But when you look closely, this is not just a zone. This is also a resistance zone because price rejected here and also price rejected this zone right here. So when we draw our resistance zone, you're going to see that this is a clear resistance zone. So you can clearly see, traders, price rejected this zone right here, meaning this is a resistance zone, not just here but also here and here. So the moving averages are very key. They help you identify those support and resistance zones in the forex market, guys. So this is another example. So most of you guys know, anytime when we have price moving in an uptrend way, it always uses this downer part as its support zone, because that is where we're always going to buy from in the forex market. So if I'm to draw this right here, so you can clearly see when I draw there my support line, this support line, which is also a trend line, as you can see. So this level right here is acting as our support right here, right here, right here, right here. And all these are zones for us to buy in the market. Remember, in an uptrend, we always want to look for buys, and then in a downtrend, we always want to look for sales. So the moving average can help you catch all those trades in the market. Moving average can be a game changer if you master it the right way, just like I've explained to you here, traders. So if you enjoyed this video, traders, apply the moving average. Try it out, use it to find trades in the market, use it to catch reversals in the market, and also use it to catch the support and resistance zones in the forex market. And you see how you enhance your trading. So traders, if you enjoyed this video, please make sure to subscribe, and I'll see you in my next. Peace.